Okay, so let's start backwards. Let's start with carrier pivot. So CJ, what do you mean by talk tracks? Tell us what's
Like,
going on.
like what do we, you know, add some notes here. Um,
Well, so CJ the other day, he pitched a client on a universal life policy, and then he came to my office. I was like, "Oh, I've talked to that person before. I think she's going to get declined for that UL." And so then CJ was like, "Shit," and went and tried to repitch her a different IUL that was much less coverage for the same price.
yeah,
And
yeah,
she did not like that. And so he came in and said, "Oh, might be kind of helpful if we could talk about like how you reframe a policy when we get pushback, like if we get pushback from a carrier." So the first thing is in setup. Okay, so I'm gonna actually write this down as I go so I can keep track of my own self. So thing one is setup, right? So before you even present options, we're gonna set up the options. So we're gonna give ourselves an out so that if we get declined, we already have a plan B that we've already communicated to the client, so it's not a surprise. Half the battle is setting expectations. Okay. So when I go to present to a client, I say, hey, so the amputation is going to be a challenge with some of the carriers, or the diabetes with insulin, or the heart attack you had yesterday. It might be a challenge with some of the carriers. And so because of that, we won't really know till we submit an application. So we're going to go through some options and I'm going to give them to you in a range because there's six different carriers that are offering us coverage. And so we're going to start with the lowest. And this is the best way to do it. It's how you get the best policy possible. We're going to start with the lowest cost carrier, meaning the one that's giving us the best deal. But a lot of times they're giving us the best deal because their underwriting guidelines are more restrictive. However, the worst thing they can do is tell us no. So we might as well start there. And if we get a yes, then great. And if they say no, that's okay. We'll go to the next one. So that's a part of the process. Does that make sense? They're like, yeah. I'm like, okay, great. So each of the three options is going to be in a range. And I'll go through and do all the other like pre-close stuff, right? These policies are going to do this. It's permanent. It builds cash value. Da, 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 da. Then when I go present the options, okay, so the lowest cost carrier is Mutual of Omaha. Now, again, they're kind of finicky, really tight guidelines. But this first option, it's the family one. Mutual of Omaha is coming in at this. There's about six other carriers that are offering us coverage. The highest cost carrier is this. So it's a pretty tight range, but as long as you're comfortable with that, then we know we're likely to find coverage in there. Second option, third option, same thing. Then if you go to Mutual of Omaha and you get unfavorable, you can say, okay, so I'm getting some pushback. We're getting some pushback from Mutual of Omaha. It gave us an unfavorable rating, which means that it's likely to get declined. So next up on the list is this one. And then you go submit the application to whomever's next. Like that's the easiest thing to do if you're on the client, one call close in real time. The big challenge becomes, does that make sense to everybody? So it's really about the setup. Like that's actually just about setting expectations on the front end when you pitch the client before you're getting into the application. If all you quote is Mutual of Omaha and then you get declined by Mutual of Omaha, you're in a tough spot because now you have to raise the price on the client. Like I don't know about you guys, but when somebody tells me a price and then they try to raise it, I feel like I'm getting scammed. So the client's going to feel that way too. Does that make sense? I'm gonna,
100%.
I'm gonna pause there. Any feedback on that? Everybody's
I I love it, and it segues with what Mike Cavallari said the other day, which was huge for me, and I used it today, which is I said to a lady, look, like based on this and this, I'm not sure you can qualify, but 50,000 in Mutual of Omaha is this and this. But if we have to bump to Core Bridge, it's going to be 161 instead of 146. But I'm 98% sure Core Bridge will approve you. She's like, great, that's good to know up front. So I have the out built in because she had breast cancer like 7 years ago. We already know Mu's, may or 11 years ago may kick her. So
Yeah.
Yeah,
Yeah.
so hearing it twice is good.
So you save yourself a lot of the heartache by just setting proper expectations up front. And Kat actually watched me learn this lesson in real time. And this was actually Kat's idea originally, was like, why don't you give them a range? You can tell them what the lowest cost carrier is and the carrier you're pretty confident with. And that way, if you get declined by the lowest cost carrier, you've already set the expectation. Because she watched me sell a client, go to Mutual of Omaha. The guy's like, I don't have anything on my health records. I'm perfectly healthy. And then, sure as shit, Mutual of Omaha declined it. I went back to the client. And he's like, oh, man. Yeah, no, I'm just going to wait. Because he felt wronged. And I couldn't dig myself out of that. So I lost that deal. So first step is when you present numbers, give yourself an out. If you're quoting Mutual of Omaha, just assume it's going to be unfavorable. Like quote the price, but in your mind, be like, it's probably going to be unfavorable. They're unfavorable most of the time, I feel like. So if you set that in your mind and then you pursue it with the client, like you're already setting the expectation, hey, we're probably not going to get an approval here, but let's try it, because if we do, then we hit a home run. Okay. We're going to swing for the fences on the first one. Just worst thing they can do is say no. Yeah. Hey, okay. It's what we thought. Yeah. But they do that to everybody. We kind of already expected that. All right. Next up is Transamerica. And I haven't had any clients have an issue with that. So everybody's on the same page there, right? Okay. The challenging one is if you try to sell at IUL and the IUL gets declined, and now you got to go to a final expense carrier because the coverage amounts are vastly different. That one's challenging. So the best advice I would give you is, if it's on the line, like, guys, I just reiterate this a lot. It's like, learn the carrier guidelines. Like, go study the carrier guidelines. Study what Foresters especially, because Foresters is kind of like a good catch-all. Like, they'll approve a lot of people that Mutual of Omaha won't. Study American Amicable's medication guides, because American Amicable is really accepting of conditions, but declines for all kinds of medications, metoprolol included. Like if your client's taking metoprolol, AMAM's out. So like learn the guidelines, because you have an underwriting system that's there that is the best expression of an underwriting system I've seen. But it's also just helpful to know, so you know when a client kind of might be on the cusp. And if they are, meaning like if you go price it out and you see that there's like one carrier or two carriers that are offering coverage, and if it's like Mutual of Omaha and that's it, then you know that, yeah, it's probably pretty risky that we're going to get approved for a UL. So what you do then is actually quote them and sell them on the final expense product. And then like as they're agreeing with that, say, hey, you know what? I want to try something really quick. I'm gonna put an application in and just see if we can get an approval. Because you've already sold them on a higher price point. So now you can go submit the application with Mutual of Omaha at the higher price point for the final expense. And if you get approved, you can say, hey, wow, I just got you an extra $15,000 in coverage for free. And now you look like a hero, right? So if you can sell them on the final expense, then you can still go submit the UL and be the hero, but they're sold on the final expense. Does that make sense? So again, a lot of it's on the front end. It's a lot of it is you knowing. Now, if you try to sell them on the final expense, they're like, oh, it's too expensive. You say, okay, so here's an option. I can't guarantee it's going to work, but we can submit all we can do is submit an application. We have a shot that's not great, but we have a shot with getting approved for a universal life. I just don't want to I don't want you to get your heart set on that, because it's like we probably won't get approved, but it's worth a try. Chances greater than zero. My underwriting system is saying that it's possible we're going to get an approval. We just don't know everything that's on the medical records. But you hold that as like the ace up your sleeve, right? So if they're like, oh yeah, no, it's too expensive, or they balk at price or whatever, be like, okay, I have an idea. Let's try this. Let's just see if we can get an approval, and if we can, then it'll drop your payment down to like 120. Okay, we were going to do that anyway. I just didn't want to sell you on that. I didn't want you to get excited about that in case it doesn't come through. I wanted that to be like a hero surprise. Is that tracking?
Mhm.
Okay. How's everybody doing?
Good.
7:15 on Thursday. We're all tired.
Taking notes.
Okay. Now, how do you get yourself out of a jam is the bigger question. And that's the one CJ's really asking. So, see, I'm going to use your example again. So, CJ sold this woman on 11 months worth of coverage, like 35,000 bucks for I think $160 a month. And I said, I think that's probably going to get declined. And then he tried to go back to the client and sell her on 6 months worth of coverage for a payment that's $40 more expensive. So when we have to go back to the client, if the policy is changing, meaning the payment's changing more than 10%, or what it's doing is changing by more than 10%, we have to expect that we have to reclose. So we can't just go into it and say, hey, yeah, unfortunately the carrier is giving us some pushback, but hey, I've got another option for us. It's 6 months worth of coverage, da 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 da. I'm gonna go, I think we should go submit the application. What do you think? Sometimes you'll get a laydown on it, but other times you're gonna get somebody that's like, oh no, that doesn't make sense for me. Why are they saying that doesn't make sense for me?
Because you already built in their head they're going to get 11 months, and that's what makes sense for them because that's what you built the whole thing to be.
Right. And if I didn't set it up in terms of like these other options, yeah, you could do 6 months, you could do this, you could do that. That's going to be challenging. Why else might they say, no, I don't care. Forget about it.
More money for less.
Or same payment for less coverage. Well, that's the logical reason. What about the emotion of it? What about the emotion of feeling like, oh, I got declined, and now you're telling me I'm going to get this? No, no, I just don't even want to worry about it. What about like emotions are illogical, and sometimes people do illogical shit just because that's how they feel in the moment. So the way to counteract that is you go back and you reclose it and you follow your closing checklist. So you go, hey, we got some pushback from foresters, and I have some options for us that I want to go over with you. The most important thing, right, when we started this, just to make sure that I refresh my memories, we wanted to make sure that if something happened to you, that Sarah wasn't going to have to come out of pocket, or that Sarah had some time to pay the mortgage, or that, and you're going to recap their why for them because we have to bring that back to front and center. You have to bring them back into that emotional state of why they wanted to do this in the first place. If we don't do that, their emotions are going to be based on the bad news that you gave them, not on the reason that they wanted to do this in the first place. So we need to get them geared back into why they're here, surface those emotions back up, right? People make buying decisions based on emotion, not logic. So you're not going to sell them logically. You have to sell them back on the reason that we're here is da 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 da. We want to make sure that your wonderful spouse isn't going to be dealing with a financial crisis right after losing you. We want to give her time. So the good news is that we're still able to do that. We can still give her time. Okay. Now, the time's going to be a little different because we didn't qualify for the thing that we originally looked at. There's some health conditions that are showing up. I don't know what they are, but they're there. So what we have is we need to recalibrate. Now, when I looked at it, and I'm going to go back into kind of like some case design and to say the most important thing is that she has some time. When we talked about it, we talked about 9 months. We also talked about 11 months. We talked about 6 months, and we landed on 11 because we said more time is better. So here's what I found is now the most important thing again is that she has some time. And would you agree that even like 9 months is better than nothing, is better than no months? What about is 6 months better than no months? Of course it is. I mean, 2 months is better than no months, right? So the first option is we can keep the same 11 months that you had. Okay. But because we have to go to whole life, the payment goes to this. Okay. The second option is kind of, we can keep the payment where it's at, but the months go down to 6. The third option is we go somewhere in the middle. Okay, we sacrifice a little bit of time and a little bit on payment, but now we're still getting your family 9 months and your payment's only going up $30 a month versus what we were planning on. But the most important thing is that we still give them time to make these payments so that we don't risk losing the home, we don't risk whatever. So out of those three, would you prefer that we keep the same amount of time and the payment goes up? Do you want to keep the payment the same and just have the amount of time go down, or you want to do something in the middle? What do you feel is best for you and your family?
That makes sense.
You see that? So you're not going back and just saying, hey, yeah, it was 11 months, now it's 6. Like, we're cooked, dude. We're cooked. You have to go back and you have to reinvigorate the why. You have to bring that back front and center and then curb expectations. And then you're going to say, so the good news is that we're still going to be able to do that. Would you agree? Like 2 months is better than no months? Of course it is. Right. And so 6 months, 9 months, that's better than nothing. Right. Of course. So now we've got 3 options. We can do what we were going to do. Okay. Which is we're going to keep the coverage the same, but the payment's going to go up. We can keep the payment the same, but the coverage is going to go down, or we can meet in the middle.
Yeah.
Which would you prefer? Does that make sense?
Yeah, that makes a lot of sense.
Is that landing for you guys? Okay. Any questions? Things that are coming up? It's so weird. It's like dead silence. Like, dude.
So when you're so to avoid all of that, when you're presenting options, you have 3 options. You start with the best one first, right?
You always start with the most expensive one first.
Okay.
It's called setting a high anchor.
Yeah.
Yeah.
Okay. I need to be better at that.
If I lead with an option that costs $500, then I tell you about one that costs $200. $200 sounds like a deal.
Yeah.
Okay, so CJ just brought up, this is presentation, just practice. It's like, this is the practice. This is the SOP. The SOP is always 3 options when you present numbers. It's always, you're going to present 3 options. The first option is what?
The most expensive.
What else is it? Anybody but CJ?
Greatest coverage.
It's at the top. It's at the top of their budget. It's the most expensive.
Oh.
It's at the top of their budget, or it's a little more. What's the second one?
Middle.
Okay, it's in the middle of the budget. What's the third one? It's the no-brainer. It's at the bottom of the budget. You have a budget range. If you're not getting the budget range, you're screwing yourself. If you're wondering why you're not getting closes, if you're not doing budget, that's probably why. So you go through, you do budget, you close on price bands. The first option sits at the top, the second option's in the middle, the third option's at the bottom. You always lead with the first one.
But is that within the price bands?
Yeah, first option should always be at the very top or a little above.
So 250, the middle, and then the cheapest, and then you present the one that's most expensive first.
100% all the time. Yeah. What have you been doing?
I mean, I've been doing that.
He's been doing the opposite.
I've been presenting with the one that they want the most first.
No, don't do that.
Okay.
Don't do that.
So I present with the most coverage.
Listen to how it
Yeah,
sounds.
Yeah, I know.
Listen to how it sounds.
I got it.
Hey CJ, so hey, that one that we looked at, okay, that one's coming in at about 180 a month. Now there's another one where you can go up a little bit in coverage. You can give your family more protection. That one's about 220 a month. And then there's another one that it'll save you a little bit of money, but it's a little less coverage. That one's sitting at like 140 a month. Which of those sounds good to you? Number one, it feels weird. Feels weird to start in the middle, then go up and go down. Like mentally, that's confusing. Right. Second, the reason you go high first is to set the high anchor, because everything you say after that is going to sound better. Right. There's a reason that, like, if you walk into any kind of dealership, car dealership, jewelry dealership, whatever it is, they're going to start you with the thing that you probably can't afford. Because everything you look at after that, it's going to look like a bargain. It's setting a high anchor. Yeah.
I just want to say at my previous work, we'd always show people trees that cost 30 grand. And they'd be like, holy shit, there's trees that cost 30. And you're like, yeah, but I got these a little bit younger and they're only 5. And they're like, oh yeah, let's go right to those.
I want that. Yeah.
Yeah, it was always.
you set a frame of reference with the first option. So you bounce their head off the ceiling. Like you give them something that's like they're gonna say no. Like you don't, the first option isn't the one you want them to pick. The second option is the one you want them to pick. The third option is your safety net. The one you know they can afford that's still gonna do the job. Right? The only time that you're presenting the thing that they want is if what they want happens to be at the very top or above their budget window. Then you can start with, well, hey, so the thing we designed, it's a little bit above the gold band. Okay, but it's what we've talked about. So I wanted to show it to you. I wouldn't be doing my job otherwise. Now, that's a little bit above the budget range that we set. So I've also prepared a couple other options. And now I'm going to go like both of those are probably going to be in the, you know, third. Make sense? Okay.
Yeah, it does.
Anything else that's coming up for you guys as we're talking about this?
No, it's good
Just
stuff.
on, it's a little bit off topic, but you said UL. Is there a significant difference, or is it just the name of an IUL and a UL?
We don't do ULs. We do mostly IULs, but Foresters calls their IUL and SUL because it's linked differently. And then there is a UL with Mutual of Omaha, but you got to go medically underwrite it. And I said IUL one time, and then somebody's like, "Well, isn't Foresters SUL?" And I'm like, "Fuck me." So, so I'm just saying ULs because that's
Okay,
universal
okay,
life, but it's all
okay,
index universal lives. It's linked to indexes, and SUL is because that's what Foresters wanted to call it.
okay,
We're just
okay.
saying ULs because last time I said IUL, someone corrected me and said Foresters has an SUL. Kyle, I think it was you. Yes,
Yeah, this
yes,
is Kyle.
it was Kyle. So, anyways, but I when I say IUL or UL, I mean the same thing. When I say FEX or whole life, I pretty much mean the same thing. Um, okay. Greg, did you have something? Anything else before we leave that topic? Presenting is an art form, but it's also a process. It's just a process. So, like, if you sell them on something and that thing gets declined and you don't have anything that's close to it, you got to go back through the process. Start with the why, go through the benefits, go through the three options every time. And if you're skipping that, if you're skipping the why in your presentation, if you're skipping budget, if you're skipping closing on price bands, like if you're skipping these things and you're not getting yeses, you're not getting yeses because you're skipping shit. So if we're not going in order of the process, like that's why we're having a harder time closing. Okay. Okay. The thing I wanted to also go over with you guys is how do you prepare? How do you pick an IUL? Kyle, can I use you as an example?
Yes, sir. Let's do
Not
it.
you, but your case. Go to the
Or
board.
me.
So I'm going to ignore ethos for the purposes of this. Wait, can you see me? It's up here. Fucking thing. Do this fucking thing. You guys probably can't see it anyway. Okay, everybody's got a scratch pad. Take out a piece of paper. And yes, Christy, I swear a lot on these calls. It's part of I don't get to use it with clients, so I use it here. Take out a piece of paper. Kyle had a client the other day that he sold an IUL to. The client was 43 years old and had a pretty decent budget. And so Kyle sold him a Forrester's SUL. Who can tell me if that was right or wrong? Was that a good thing or a bad thing? The client's 43 years old, decent budget. Kyle went to Forrester's. Right carrier, wrong carrier.
Decent health. Moo, probably.
So for why?
Uh,
Young enough.
less premium for more coverage.
Sort of. The correct answer is that Foresters is not good for young people because of how their IUL is structured. Okay, they have a 4.5% cap and a 2% floor, which is really good for old people, but not so good for young people. Young people benefit most from carriers that have higher credit rates, higher crediting, like interest credits, such as Mutual of Omaha or Transamerica. And reason being is that if we compare their illustrations side by side, that client will accumulate more cash value because of how Moose IUL or Trans IUL is structured comparative to Foresters. So here's what I want you to write down. Very simple rule. If the client is above 71, if they're 72, 73, 74, or 75, you're probably going Foresters. The hard rule is 72. If they're 72 and up, you're definitely going Foresters. 71's kind of on the cusp. Okay, 72 and up, you're going Foresters, SUL. All day, every day, no questions asked. 72 and up, Foresters. Free trust, free will, and the way they structure their SUL is better for older people. And it happens to be that their underwriting guidelines are favorable. If the client is below 72 and cares about protection, meaning they care about the most insurance they can get, they don't really care about cash value. So this client is probably like north of 50 or 55. So 55 to 72, you're probably going to Mutual of Omaha if you can. Okay. 55 to 72, Mutual of Omaha. If the client is under 55 or the client wants well over 100,000 in coverage, you're probably going to Transamerica. And that's it. Like those are the rules. Transamerica and Mutual of Omaha compete. I really like Mutual of Omaha's IUL for protection purposes. So if they're, like I said, if they're 55 and up and they care about insurance, they care about having 300,000 in place for their family. They don't care about cash accumulation. They don't care about a backup retirement account. They care about insurance, Mutual of Omaha. If they're younger and they care about cash accumulation and a backup retirement account, or they care about having all this money that's been built up that they can convert into a self-funded pension plan, Transamerica's IUL is structured better. Make sense? So over 72, Foresters. 55 to 72, or just cares about protection, Mutual of Omaha. Cares about cash accumulation or below 55, probably Transamerica. Okay. Now, yeah, under 70. Oh, if the coverage is less than 100,000, Mutual of Omaha. So if the coverage amount's less than 100 grand, Trans is out. Transamerica's out. They're just not even in the picture. I hate AmAm, but AmAm's a backup. This is like your first stop. Okay, first stop, under 100 grand and under 72, Mutual of Omaha. Under 72 or under 70, over 100 grand, it's either Trans or Moo. But under 55 and over 100 grand, Trans.
I shoot you a question, Dustin.
Yeah.
So I have the lady I talked to today. We're talking again tomorrow. She had breast cancer 2015. She's 69. She wants a trust. I quoted her Corebridge and Mutual of Omaha. Um, should I add in Foresters?
Wait, why are you quoting what she's how old?
She's 69.
And she only had breast cancer?
Yes.
Uh, and you're quoting her a final expense product?
Yes.
Why a final expense over a UL?
Nothing came up on a UL when I put it in. When I put in all of her information
What's
on
her
your
height and
thing,
weight?
it's pretty good. It's 5'7", 145.
Is she was cleared from breast cancer 15 years ago?
No, 2015. So 11
Oh,
years.
9 years. 2015, 11 years ago, breast cancer.
Yeah.
What medication?
Everything on it came back declined. I mean,
What
so I don't.
medications?
She's not on any medication. She's on high cholesterol, uh,
Torvastatin?
Aberstatin. Yeah, and that was it. She has high blood pressure, but they took her off medication 6 months ago because she doesn't have it anymore. She's good. She lowered it with diet and exercise.
the something else is going on. You could probably take that Forrester's SUL if height and weight's good and all that's showing up is that she had breast cancer 60 or 11 years ago. She'll
Yeah.
qualify for AMAM and Forrester's SUL unless there's like other medications that you're not mentioning. If it's just a torvastatin, if you put in that she had high blood pressure and she's no longer taking her medication, that's probably tripping the system because it thinks that she has high blood pressure and she's just not taking her meds.
So should I take that out and see what it does?
I'd have to see it. Let's stay on after this. We'll do a screen share and we'll walk through it. Figure out.
Okay, cool. Yeah.
But that's probably not Corebridge. It's probably a Forrester's UL.
Yeah, I just put Corebridge as a backup for Mutual of Omaha because I know they handle cancer well. But if I can
I
get her
mean,
to
it's
IUL,
11 guys. It's 11 years ago.
yeah,
Like at 11 years ago, everyone handles cancer well except Mutual of Omaha.
yeah,
Mutual of Omaha final expense will handle that just fine because it's over 4 years.
yeah,
But it's like FEX, if the cancer is more than 4 years old, you can pretty much go to any FEX carrier. It doesn't matter.
yeah. Okay.
So, and then ULs are a little different, but we'll do a screen share and walk through it so I can see what's going
Okay.
on. Kyle, you got
Yeah.
your hand up?
Yeah, I just wanted to add another big thing for us, and a good reason to understand this is the commissions that we went over.
Oh yeah. Yes. Everyone on the call should be familiar with the commission comp grid. Right? Nod your head if you're familiar with the commission tool on score. Shake your head if you're not.
I'm not. No.
Kyle's not, Kat's not, Greg's not. Christy, are you?
I I look at it.
Yeah, good. If you're not familiar with this tool, then this will hopefully be helpful. Go to, I'll do a screen share so that you guys can see it. Because this is big. It's like if you're like become familiar with this, become familiar with it because this will make a large difference for you. The way that our commissions work, guys, is we have a commission level with Pinnacle. That commission level correlates to commission percentages with each carrier. And so knowing what those commission percentages are will save you some heartache. Similarly, understanding like how the commissions are calculated, especially when it comes to ULs, is really valuable. The downside with foresters is that they calculate commissions based on every carrier calculate, especially with ULs, calculates commission based on target premium. Target premium. If you're unfamiliar with that term, write it down and look it up. Target premium. Okay, target premium is not the premium that the client's going to pay. Okay, every carrier sets it differently. If you go into Foresters and you go select the payment mode or payment option, instead of being the cash solve, you can change it to target premium and it'll show you what the target premium is for that coverage amount. That target premium is what they base their commissions on, or your commissions. So if you sell a client a policy that's 250 bucks a month because that's what the cash solve told you to sell, the target premium could be 170 a month. And then you're going to get a commission check and you're going to say, what the hell happened? And it's because of this. So know that about foresters. We go to foresters when we're really just looking to do what's better for the client, or we have to. Um, but we don't want to choose foresters over a Mutual of Omaha if the client can get approved with Mutual of Omaha. One, because Mutual of Omaha's easy solve is also it's actually under the target premium. So Mutual of Omaha pays on the whole thing, so you'll make more money. Transamerica's target premiums are also much higher than what their easy solve does. So you can make more money because you get commissioned on the full premium. So it's just really important to know when you're dealing with ULs. Yeah, Kat?
When I was running a Transamerica UL illustration and I did target solve that middle, what do we call it? The fat option.
No, that's actually the that's just the target. It's like Middle is muscular. Like the fat would be overfunding it, and then their maximized protection isn't quite lean, but it's on the leaner side. But yes, can continue.
I wish I had it in front of me, but I
Oh, I'm actually sharing my screen right now so you can see it. If you have a specific case that you
yeah,
want to.
yeah, I
Okay,
do.
while she's pulling that up, I just want to show you guys what I mean on Foresters so you have a frame of reference here. Don't send me the fucking code. Don't do it. Hey, okay. So if you go to Foresters, you go to illustrations. I just want to show you what I'm talking about. Smart UL. Let's say the client's the 68 and we want to do, I don't know, 75,000, 60,000. Okay, we're paying attention to what's happening on the right. Everybody can see this, right? This is how you figure out what the payment's going to be. Okay. Down here where you can change, where you can select premium amount, it auto selects to cash surrender solve. This is the right way to calculate it. But if you want to see what your commission is or would be based on, you go down and select commissionable target premium. Now, if I just sold this policy, I'd be thinking 241 a month. That's almost 3,000 in AP. It's $3,000 deal. Awesome. And my commission is going to be based on 3 grand, but not with Foresters. So you hit commissionable target premium and you'll see this update that the target premium is only 202. So instead of it being a $3,000 deal, it's a $2,400 deal is what you're going to get paid on. So with Kyle's deal, I showed him, hey, by sending that to Foresters, you're only going to get paid on like 110 bucks. You send that over to Mutual of Omaha, you're going to get paid on the whole thing. So I showed Kyle how to make an extra $800 on the same deal that he just sold and do better for the client. But I just want you to see that to know what target premium means. Target premium means that's what you're going to get paid on. Okay. Matt, you with me? Chris? Kyle? Okay.
But why is it that
Me.
way?
Why is it that way?
Yeah.
Dude, why is the sky blue, bro? Like, I don't know. It just is. Like, it just is that. It's like
Actuaries.
that's what that's the
Actuaries.
carrier's business.
Yeah.
Frankly, I think it's like every carrier does things a little differently. So it's not my job to know why. It's just my job to know that it's there and make sure you guys know that it's there also. My guess though, Chris, is that it has to do with it's just their business model, right? It's like, oh, okay, well, we'll just pay a lower target premium. We'll pay a more aggressive comp rate, but we'll reduce the target premium. Hey, we'll give out this 10% bonus if you hit this amount, but we're going to reduce the target premium. It's just how they work. But they also have much more flexible guidelines than a lot of other carriers, so we can get deals approved with them that otherwise would get declined elsewhere. Okay. Kat, you have that case?
Yeah, so female, February 5th, 1995,
Okay.
California,
Okay.
um, 500,000.
Let's go. Okay, max it out. Target solve. And what's our question?
So she, I was surprised because I thought she would want to leverage this as like a, kind of like an investment tool, but she said she really only cared about the 500,000 coverage. And so when quoting her the pricing, I like, because I was gonna quote her the 327 until she clarified that she doesn't care about any of that. She just wants the 500 grand regardless. So then I quoted her the 165. Did I mess up?
You quoted her 165?
Yeah, because it was just enough to keep the policy in place and she didn't care about cash value.
No, you're fine. So you did this one.
I was under the impression I had done the target solve, but
No, the 165.83 is the maximized protection one. So target solve would have been 327. This is the other thing to know with Transamerica is like you don't get as full control over what the payment's going to be. You just get these options. So this is a target solve's great. Look at the cash value buildup. It's crazy. Cash surrender value at 60 is 1.8 million. Like she's crazy for not doing that, but whatever. The
Agreed.
maximized protection, she's still going to get good cash value. She'll have 453,000 of cash value. So yeah, it's a great policy.
Okay,
But
thank you.
the purpose of expressing this is that the premium was 165.83, but they would have paid up to a premium of 327 and 9 cents. That's what target means for these guys. So pay attention to target premium. Kyle?
Why did you max that out all the way to 500K?
That's the case that
That's
Cat
the
has.
coverage that she wants.
Okay.
Okay, so on score, okay, it's going to land you at the dashboard. You're going to go to resources. In resources, up at the top in this beautiful orange font on a brown background, we're going to click on comp lookup tool. And in the comp lookup tool, you're going to go over here and you're going to select your comp rate, 95 or whatever it is. And you're going to see that you got all these carriers. Okay, so you can filter by term, final expense, or IUL. And then it's just good to look. So if we look at IUL, you'll see like AMAM is paying comp minus 35, right? At a 95% level, AMAM's only paying 60%. Ethos is paying comp minus 20. Foresters pays comp minus 17 and a half. Mutual of Omaha pays comp minus 15. Trans pays comp minus 20. So Mutual of Omaha is the highest commission, followed by Foresters, followed by Trans. And then we've also got F&G's Quantum at 75, Ethos Accumulation IUL 75. I want to say that Emeritus, both of these are fully underwritten, and AMAM's is trash. So, oh, and Lafayette, I guess, has one too. But know those percentages because those will affect how much money you make, right? So it's if it's like, oh, I got one that I could take to Foresters or Trans or Moo. It's like, well, there's a 5% difference between Moo and Trans. And if it's a $3,000 deal, it's $150. Like that's real money. If you're like, well, I could go to Foresters or I could go to AMAM. It's like, well, AMAM, it's like 17% difference. That same client, if it's a $3,000 deal, it's $510 in commission that you lost because you sent it to AMAM. It's also why I didn't really mention AMAM. AMAM is like, can't get it approved anywhere else, might as well give it a shot with AMAM. Make sense? It's also when you're looking at FEX, this is really useful. So know that if the client's over 80, right, then there's different comp rates. American Home Life will pay comp minus 30 above from 80 to 84, comp minus 40 for 85 to 89. Balt Life 55%, so same as AMAM or same as American Home Life in the older ages, but way worse in younger ages. Corebridge SIWL pays great. It's almost even comp. Mutual of Omaha Living Promise is comp minus 15. So just take a look at these and you'll get a feel for it. Transamerica FEX is comp minus 5. So it's like actually the best paying product is Corebridge SIWL. So if you're thinking of like going FEX and Corebridge is within $10 of Mutual of Omaha, go Corebridge. Like the client's not going to balk you over $10, but if you can get 92 instead of 80, oh, it's 12%. That's real money. And if you do that over your deals, you go write 12 grand or 20 grand in a month, 12%, that's $2,400 just by being aware of what your comp rates are per carrier. Everyone tracking? Okay. All right, we got 10 more minutes. You guys have anything else you want to cover? I've got one other thing while I have you. Term is now live in the pricing system. So I've changed this up a little bit. You'll notice it looks a little different because the all like green boxes were just way too much on my eyes. The price is a little larger, so it's easier to see. And then you've got three boxes. It's all going to load, so it's all right there for you. But now we can just click through these. So you'll see final expense, index universal life, and term. I forget why this client's getting declined on everything. 72. Oh, pacemaker. That's why. There we go. Oh, and he's below 25,000. So come on. This guy's 72. So when you click into term, you'll get all the different, like it'll let you know where you can go with it, to what extent. Foresters should be in here, but isn't for some reason. I think Forester's term is a minimum of 50 though. So anyways, terms live. Yeah, there we go. There's Foresters. Strong Foundation, Your Term, Mutual of Omaha, True Stage is in there. Still to be implemented is Kansas City Life, Ladder, LGA. So there's a bunch of term carriers that still have to be input into this, but Foresters is in there. So know that that's available. Are there any questions on the underwriting system?
No.
Cool. Okay. That's it. That's all I got for you guys. Anything that you've got captive attention, anything that I can support you with, questions you got, guidance you want.
I got a quick question. I mean,
Yep.
maybe it's not quick, but like doing policy flips or like getting people into a different policy. Sometimes I just don't know what to say when on these Chloe calls, I mean, not that people are picking up very often, but it's like they like what they have. They don't really want to switch. They don't want to go through all the trouble of switching.
Well, that just means you haven't given them a reason to switch.
Save money or increase coverage.
Right. Well, pretend I'm the client. Yeah, Chris, hey, yeah, I have this $15,000 policy. I'm paying 120 bucks a month for it.
115 bucks.
Sure.
And what you get 15,000?
Yeah.
Well, would you wouldn't it make sense if I could get you more coverage for the same amount of money?
No, I'm pretty happy. Pretty happy with what I got.
Okay, so if you found a lucky scratcher on the floor for another $5,000, would you pick it up?
Not if it required me to fill out an insurance application.
Okay.
Okay, who wants to role play with me?
I'm terrible at it.
I mean, I guess I will.
Okay.
I mean, am I going to be the client
Okay,
or?
right on. You got 15,000 for 115 bucks?
Hmm.
Okay, great. And the agent, this is why we do these policy reviews. The agent really didn't update the file. What carrier did you get? I just want to put it in here so that it's in the system. You're not going to get calls from our junior underwriters.
Foresters.
Okay, you got Foresters. And you said it was 15,000 at 115, right?
Yes.
Okay. And just out of curiosity, I mean, did you have any like major health conditions in the last couple of years, like heart attack, stroke, or cancer or something?
No.
Hmm. Did the agent tell you why Foresters? The only reason I'm asking is usually when our clients are directed to Foresters, it's because there's like a major medical condition that prevented them from getting a preferred rating. But you
Uh-huh.
just said you didn't have any major medical conditions, so that's why I'm just trying to figure that out. Hey, well, let me ask, why 15,000?
Well, that gets me like 9 months worth of mortgage payments.
It gets you nine. Okay. And is that for your kids or your spouse or
Uh, for my wife.
it's for your spouse? Okay. And if, I mean, was 9 months what you wanted, or did you want more like 12 or 15 for her?
Well, 12 would have been ideal, but that's all I could get within my
Gotcha.
budget.
Gotcha. Okay. So you wanted 12, but what the agent got you, all they could get you was nine within your budget.
Yeah.
Okay. I mean, it was probably one of the junior agents. And again, that's the reason for these calls. Based on what you've shared with me so far, and just let me make sure I'm understanding correctly. You haven't had any heart attacks, no strokes, no cancer. You don't have dementia or anything, right? You're not in a
I
wheelchair.
mean, I had some chest pain. I went to the hospital, but they didn't rule it like a heart attack or anything like that.
Okay. And was it like heartburn or what was the chest pain about?
They just said I had inflammation of the heart.
Inflammation of the heart. Okay, that's a new one. I don't think I've heard of that
Mhm,
before.
mhm,
Um, okay, great. So again, this is the reason that we do these reviews. What I just heard you say is that you really wanted 12 or 15, but the agent only got you nine that fit within your budget. So again, my name's Dustin. I'm one of the senior advisors here. The reason that I do these calls is to make sure that when our junior agents do policies, one, that they fill out the system, which hardly any of them do, but two is to also make sure that our clients are getting the best possible programs and policies. Now, I have a good amount of the information here. I think there's a pretty good shot that you can get the 12 or 15. Now, did they put you on any medications for when you went to the hospital? And
mm-mm.
see, now I'm in the FI. Like now I'm in FI. You told
Right.
me you wanted 12 months. You only got nine. I got you. You're done.
Mhm,
You're cooked. I'm getting the FI. So like you can't just walk into it and say like, well, would you be interested in more coverage? No one knows what that means. And you don't know what that means. What does
mhm.
the coverage mean to them? Why did you get it in the first place? Oh, you wanted to
Right.
protect your spouse. Okay, cool. Now I'm starting to get to the emotional reason that you got the coverage in the first place.
Mhm.
Right. But if they're like, oh, yeah, well, I got this. Okay, well, would you be interested in seeing if you could get more? No, dude, fuck off. I don't know you. That's a bunch of time that I got to spend. Like, you know what I mean?
Sure.
So what we
And
want
well,
to do when we get the client on the phone is like our job is we're here to do the policy review because there's a lot of junior agents that have kind of come and gone. Hardly any of them filled this thing out. You said you didn't even get the policy in the mail, right? Okay, yeah. So my job is just to make sure that you've got the best possible policy and that actually the junior agent that helped you did a good job. So, but what you shared with me on just now is that you really wanted 12 or 15 months for your spouse, but the agent only got you nine. So the way I started that is you said Foresters. Now, Foresters is a great carrier. We all know that, but I can't tell that to the client that has Foresters. I need to poke a hole.
mhm.
So in order for me to poke a hole, I say, oh, okay, yeah, okay, Foresters, right on. And notice I pause. And did you have any like major medical conditions in the last couple of years, like heart attack, stroke, cancer, any of those things? They're gonna say no. Say, okay, interesting. And why 15,000? Like, was that for your spouse? Like, what were you trying to do? So what I'm trying to do is poke
Well, most people are
holes.
going to be like, I don't know.
Most people aren't going to be like, I don't know. Like they're not. I mean, I don't get that. Like I don't get I don't knows. So if they're saying I don't know, then you don't know why you got 15,000?
That's the most I could get
That's the
within my
okay.
budget.
That was the most you could get in your budget. And
Mhm.
that's a great answer for us. Okay, and when you were looking at it, like did you want more coverage than that? Like for the same budget that you have now?
I mean, yeah, of course that makes sense to
And
get
boom, now
more.
I got you. Like now I got you. Now I'm going to get you into FI. Now I'm going to see if I can get you more coverage because you just told me that you wanted more coverage than what you got. You
Mhm.
wanted more than what the agent gave you. He gave you what fit within your budget. And the second that I can get you there, now I've got you on the phone and now I'm asking questions, you're answering them. And so I'm going to flow right into the FI. I'm going to
Mhm.
get your health information. I'm going to price it out while I got you on the phone. Then I'm going to say, gosh, you know what, Chris? While we've been talking, I've been putting this into my underwriting system that syncs with all 40 carriers in the US. And what I'm finding is that actually, I think the agent might have made a mistake because I'm seeing that we got three carriers here that we can get your wife 15 months for the exact same amount of money that you're paying right now. And that's again why I do these phone calls. So now I'm assuming that you want the 12 or 15 months, right? For the same money you're paying today. They're like, yeah, okay, great.
Well, I just don't have really time right now. Like, can we do? Yeah, I mean,
Don't have time.
I gotta
Yeah,
go.
of course, Chris. And frankly, yeah, I know you're busy. But we're like almost done here. If you could get your wife this extra 6 months for the same money that you're paying, that's worth an extra couple minutes, isn't it?
Couple minutes, sure.
Okay. Okay. Thank you for making the time. I'm going to make the time for you too. Hold on one second. I'm going to text my appointment that's supposed to be walking in right now, because I want to make sure we get this wrapped up for you. So hold on. Let me just make that couple minutes for you.
Well,
So
I gotta go to a doctor's appointment in 15 minutes. Can we make it
perfect.
happen?
Yeah, perfect. We'll be done by the time you're walking through that front door, we'll be done. Okay, so and now I'm going back in the FI. I'm going to take the application. And if we run out of time, we run out of time. But I'm going to get this dude social. I'm going to get it. So you have to find the opening. So the
Mm,
opening is in order to have an opening, you have to poke a hole. So
mm,
think about it like that. Like in order for me to get in there, like in order for me to get in the conversation, I have to poke a hole and plant a seed of doubt that what you have is not the best you can do. And I don't plant that seed of doubt by asking, well, would you like some extra coverage for your money? That's not a
sure.
seed of doubt because I'm already thinking, no, I already tried that. I
Mm,
already tried that. The guy got me what he could. So I don't believe you. I don't believe
mm.
you can do that for me yet. But if I ask you, well, so, oh, interesting. Okay. And did you have any like major medical condition, like heart attack, stroke, cancer, or something? No. Huh. Okay. Huh. That's weird. Yeah. Usually, when clients are routed to Foresters or Corebridge or whatever, it's because there's like a major medical condition. And so some of the other carriers couldn't qualify them. But with what you've shared with me, if you didn't have any of those, I don't see any reason why you're not getting a preferred rating. Is there something else that's coming up in your medical history? And like now I got you answering questions and now you're wondering like, "Oh, yeah, okay, I guess I didn't shop it around that well. I guess I maybe I didn't get the best deal." Or the second I have you doubting it, now I've got my in and it's game over. Does that make sense?
Right. And from there, I know we're over time, but from there, I mean, I gotta tell them to cancel their policy, or I gotta cancel it, like get on the phone and cancel it for them.
Yeah.
Okay.
After you
Yeah.
get them, I would get them all the way down the rabbit hole.
You'll,
Then you can
yeah, you'll
bet.
get once you got them, dude. It's like once they're giving you your social and they give you banking, it's like that's your client. So you say like they're going to be like, oh, well, I don't want to pay for two policies. It's like, oh, of course, I'm never going to have you pay for two policies. Listen, Chris, I do this all the time because there's unfortunately a lot of younger agents in this industry that don't really know what they're doing. And so frankly, half of my business is actually just fixing the mistakes of a bunch of younger agents. So here's what we do. Now, we're not going to do anything with your current policy today because I never want you to have a lapse in coverage. We're going to submit the application, get our approval, and when we're approved, we're going to set the start date to be the same date that your payment currently comes out. Do you know when that is?
On the third of every month.
It's on the 3rd. Perfect. So that gives us a little over 2 weeks. So this one will start on the 3rd. And as soon as we have the approval, I will call the carrier. And then as soon as I have someone on the line, I'll bring you on. We'll cancel the policy. We'll see if we can get you a refund for some of the premiums that you paid. And this policy will kick off as if it'll just be a perfect handoff. That policy ends, this one begins. You're never going to make a double payment. Does that make sense? Okay,
Makes sense.
great. Now, are you going to be available tomorrow around 10 a.m. or what's your schedule looking like tomorrow? Now I'm going to close them on the time that we're going to call the carrier and that's it. Game, set, match.
Thank
Does that
you.
make sense?
Makes sense.
If it doesn't, push
It
back.
makes sense.
Can I ask one quick question about that?
Yeah.
When you pull the banking information, the insurers are required by law to give a 30-day grace period, right?
Yeah, it's called your no look or it's your free look back period. Free look period.
So if
It's
someone
not
were
a
to
great it's
say,
not a grace period, it's a free cancellation period.
no, 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 like if you have a policy for a year and we call and we pull the banking information,
Yeah,
The
yeah.
answer is yes.
Yes, they get a grace period.
right, that's what I was referring to, 30 days.
I don't know if it's 30 days, but I know it's at least 7. But I think it's 30 days.
Okay.
Yeah. So I misspoke earlier. Chris responded and said, I don't know. I asked why that coverage amount. Chris said, I don't know. Chris, I thought you were referring to who is there to protect or who the beneficiary is.
No,
The I don't know is the perfect answer. When you say, and why 15,000? If they say, I don't know, oh, awesome. I love that. If they say, I don't know, be like, I hear that a lot. Because unfortunately, there's a lot of junior agents in this business that they just give somebody a coverage amount without it actually being based in what the family needs. And what that usually means is that they're either overinsured or underinsured, neither of which is good. Overinsured means you're overpaying, underinsured means your family doesn't have the resources they need to handle the transition. So, but that's okay. I'm here to help you with that. So, but I understand 15,000, they just gave that to you. Now, was that the most you could qualify for, or did you want more than that at the time for the same money that, like, was it a budget thing,
I
meaning
don't
it
remember. It
was
was a while ago.
it was a while ago?
Mm,
Like how long ago? Was it like 2 years ago?
I don't remember.
You don't remember when you got it?
Like, yeah, probably just like over a year and a half ago, somewhere around there.
Okay, great. Perfect. So you've had it in place for a year and a half and payments have been made consistently, right?
Correct.
Excellent. Okay, so that means maybe there's a little bit of buildup in cash in that policy that we might be able to get you back, get you kind of a little bonus payment. But what I really heard earlier is you said I wanted more for the budget. Like if obviously if you could have gotten 20,000 for what you're paying instead of 15, you would have taken that, right?
Sure.
Yeah, of course. I mean, we all would. I'd take it free. I'd take extra 5 grand. So what I'm seeing here is now, and then I'm going to start asking questions again. I'm going to go right into the health FI. I'm not asking for permission. I'm just asking questions. Are you taking any medications for that heart condition? I'm going to fill out the FI. Cat.
So everything you're saying makes absolute perfect sense to me. If it's a newer policy, if they've got it in the last year, 2 years, but if it's been 3, 4, 5 years, even if there's been no health changes, the likelihood of being able to get them, them being 3, 4, 5 years older, the likelihood is rather unlikely. Wouldn't you agree?
No, no, not necessarily. It depends on the coverage amount. So if they say anything less than 25,000, I know that that's a whole life policy. And my guess is that they probably got a whole life policy because there might have been something that happened in their health history shortly before that whole life policy, like a cancer 4 years prior to them getting the policy or 3 years. There might have been a heart condition, something that they may be past the seasoning period of that now. So now the opportunity is to flip it into a universal. So I'm going to say the same stuff. Be like, okay, wonderful, great. You got that in place 3 years ago. That's fantastic. How much coverage is it? Oh, it's 20,000. Okay, great. And let me just ask, like before that, did you have any major medical conditions in like the 5 or 7 years like leading up to that? Like a heart attack, stroke, cancer, any of those? No, huh? And why the 20,000? If they say no, no, I didn't. No, I'm perfect health. Okay, great. And why the 20,000? And now, well, I don't know. That's just what the guy gave me. Okay. And if he would have given you 25 instead of 20 for the same money you're paying, you would have taken the 25, I assume, right? Okay. Hmm. Yeah, that's interesting because most of the time when people that are as healthy as you, usually they go to like a preferred carrier, somebody that gives preferred ratings. The carrier that you have is fantastic. They're a wonderful carrier, but usually they're reserved for people that have had more serious health conditions than what you've shared with me. So now I know you said you didn't have any cancer, stroke, or heart attack. Was there like diabetes or neuropathy or any of those kind of things with insulin? No? Oh, wow. Could have been the agent. The agent may have just made a mistake because I know that, I'm looking at a policy right now that looks like it's about $5,000 more in coverage for the same payment that you're making. It may have just been that 3, 4 years ago, that agent just didn't know. Or, carriers are always coming out with new products and programs. And so it could be that just what's available today wasn't available for you. Maybe the agent just didn't have the access to it. But and then I'm going to go back into questions about the health. So you see, like what I'm getting at here is you lead off with, did you have any major medical conditions like heart attack, stroke, cancer? No. Oh, weird. Huh. Then I'm going to sow a seed of doubt with the carrier. As soon as I got that seed of doubt planted, then I'm going to water it a little bit. Right. Okay. Well, was there anything else? Or if you wanted, like, did you want more coverage than what you got for the money that you're paying? I mean, I would assume if you could have got 25 instead of 20 for the same price, you would have taken that, right? Water the seed. Well, yeah, of course. Cool. Now I just got an indirect, yes, I want more coverage for the same money. And as soon as we're there, okay, great. Well, yeah, I mean, well, let me just take a look now. And then I'm going to go back into medical questions. Does that make sense? It's not 100, it's not a 10 out of 10 thing. Sometimes you get somebody that got a UL or they got something 5 years ago and you're cooked. But sometimes you get somebody that got a term policy 5 years ago and then we got to flip the term. Sometimes it maybe they got a final expense policy because the agent that was selling it didn't know how universal life worked. Who knows? So we just have to ask questions to try to uncover and reverse engineer what's happening. And then so you sow the seed, you water the seed, and then you go into the FI, get the health information, find out what you can get for them, and go. Sow the seed, attack the coverage amount, water the seed, go. Heart attack, stroke, cancer? Oh, weird. No. Huh. Carriers reserved for that. Usually, we only send clients to that carrier when they don't qualify for some of the carriers that offer preferred ratings. I'm watering the seed of doubt. Make sense?
But at that point, you don't know whether or not you can get them more coverage.
Fuck no, but I'm just trying to keep them on the phone and get them to give me a shot. Like they're not going to give me a shot by me just asking, well, wait, would you be interested in more coverage if I could get it to you? No, I'm good, dude. No, I'm good. You have to get them to doubt what they have before you can open the door to solve. Like you have to manufacture a problem in their mind. The problem you're going to manufacture is that maybe I didn't get the best thing I could have gotten. Maybe I can get more coverage for the same money. Right now, you've got them interested. But until you
Right.
have them interested, they're not going to give you any time. They got better shit to do.
Mhm.
You haven't given them a reason to give you time yet. You know what I mean? So no, I don't know, but my job isn't to know yet. My job right now at the front end is just to get them interested and engaged enough to spend time with me so that I can find out. And hey, worst case scenario, I find out that I can't do anything for them and I can say, hey, you know what? I'm looking at it. And yeah, I think what you have is actually that was the best policy at the time. What I'm seeing now is that unless we want to look at the coverage amount specifically, like I asked you why 20,000 and you said you didn't know. So what can I just ask, what's your mortgage payment, right? If I can't beat it apples to apples, like we've gone through this, we went through when we're doing a policy replacement. If I can't beat what they have by matching the payment with more coverage or matching the coverage with a lower payment, then I have to attack the amount of coverage they have and the plan that they have. If you can't beat it, attack it. Does that make sense? Are we all on the same page on that? I like
Yeah.
we've gone over this.
That makes sense.
Yeah, I want like totally on the same page. And even now I'm sitting here thinking like the thing that's going through my mind, one of the things sometimes people miss when we're learning is we're learning all these great things you're saying and you've got the track down. But the number one thing you have is a belief. You believe you can turn them 100%. You know you can do it. Whether you can or not, you have that belief. And the amount of resistance that I give to Dustin is the amount of resistance that the clients will give to me. Because that you're just a mirror. Everything in this, you're a mirror. Everything you accept, every like if you accept, oh, I don't have time, it's because you don't believe you have time, or you wouldn't accept it. And so, like, I just keep thinking about like when I'm on the phone with people and I think about conversations I have with Dustin where I'm asking questions and he starts coming at me and I'm like, oh, like he's, but I'm resisting you. And then I realize that same resistance I'm giving you is the same I'm getting from the clients. And it's a belief level thing. It's at a core belief level. Because we can learn the talk tracks, but if you don't believe it, they won't help you.
But also it's like you don't have to believe it. Like don't
Yeah.
you don't have to believe that you can get them a better deal. You don't have to believe that. Like, you don't got to worry about
Yeah,
that. All you got to believe is, can I get them to talk to me? Like, before
that's
you
what I
can get them a
mean.
better deal, you got to get them to talk to
Yeah.
you.
I don't believe in it's not the better deal. Is do you believe you can get them to open up? Do you believe you can turn them? It's if you can't get that little belief level, nothing you say is going to help.
Well, yeah, and that's otherwise, yeah, you'll give up, right? It's like
Yeah.
you'll accept their excuse. Oh, I don't have time. Dude, I know I'm super swamped too, but I know this is important. That's why I'm calling. No, I know. That's why I'm calling. I know you don't have any time, but what you have right now, there's a reason I'm calling. What you have right now, I think was a mistake by a junior agent. That's why I'm calling you. This is important. It's for your family.
And it's
Like,
to remember, like Dustin was a baseball player. If he's batting 278, he thinks he's succeeding.
I'd never bet
Oh.
at 278. I was in the hundreds for sure. I was like
But you know
150%.
what I'm talking about, though. This is a game where the greatest believe they're batting Hall of Fame numbers when they're failing most of the time.
Yeah, I mean listen, you're gonna 90% rejection. But that's sales. Like all the stuff we're going over right now is just to arm you with like what to say and some ideas of what to say. Like there's not an objection you're gonna throw at me that I'm not gonna have like I'm not gonna try to I'm not gonna stop. I'm gonna try to overcome it somehow, some way. Most of the time by asking questions. So like telling is selling, and we have to, Chris, we have to know that asking logic questions are not going to get you there.
I hear you.
Would you like to have more coverage for the same money? Of course they would, but they don't believe you yet, and they don't have any reason to believe that that's possible. Or another way to say that is they don't have any reason to doubt that they didn't already get the most coverage they could for that money.
Mm.
You know what I mean? So it's like we have to open that door a little bit before we can walk through it. Because hey, guess what? Of course, dude. If you're going to pay $160 a month and you can have 20,000 or 25,000, of course they're going to choose 25,000 if they're logical creatures, but they're not. They're not logical creatures. And
Mm.
so in order to get them to that point where they're going to be willing, people are also afraid of saying yes to a cold call. Okay, they're afraid of saying yes. If they say yes, that means they're opening the door for you to talk more and try to sell them something. And people are deathly afraid of being sold something, but they love to buy shit.
Mm.
So, like, if you're asking them a question that is a yes no answer, you're asking them a closed ended question too early, chances are you're going to get a no because they're afraid of saying yes. Because if they say yes to you, they're opening the door for you to potentially convince them to do something that they may not want to do. People are so afraid of that. So you can't ask them a question that they're going to need to say yes to until way further into the conversation, until they've already opened the door and they've let you in. Once they've let you in, cool. Okay, now we're good. But until they let you in, you're it's like unless they've opened the front door and invited you into their warm household, like you gotta ask them like what's the boiler room line? If you were drowning in the ocean, I threw you a life raft, would you take it? They'd be like, nah, dude, I'm swimming. Because they're afraid of saying yes. So that whole notion of like just get them to say yes quickly, terrible idea. Not saying that that's what you're saying, but there's sales psychology out there that's about that. Okay, we were way over time. Last call. Any other questions?
You
Comments?
still want to look at that thing when everybody's gone?
Yeah.
All right.
Yep. Okay.
I'm going to leave this room and join from my computer.
Okay. All right. Appreciate you guys. If there's anything specific you want to talk about after, I'm going to be on the road here in like 12 minutes and then I got a 20-minute drive home. So call me. Bye-bye.
I might just stick around and look at what